All right, welcome back to Dip Snipers. Today, I'm going to be talking about how to recognize when the dip is a dip. Honestly, when the whole stock's going down, let's take a look over here. We're going to look at GameStop on this chart action. Right, this price action on this chart. Okay, we're gonna take a look at GameStop right here. Now, as you can see, the stock is starting to be bearish. And how do we know it's starting to be bearish without seeing this, right? Or in English, how do we know it's bearish without seeing that it's starting to move downwards? Okay, well, a couple ways that we can do it is we can start seeing the kind of candles that are forming and how many of those. Okay, so if it's just one candle that looks like this is starting to look like a topping tail. What does that mean? Okay, topping tail. This one is actually more of a topping tail. It means that there was big price rejection. So if you don't know how to read candles, we're just going to quick crash course, okay? The candle opens, okay? Now, since this is a red candle, that means that the candle opened here. The high was here, the low was here, and the close was here. So what does that mean? The open and the close, if it opened here and it closed there, that's a red candle. Okay, the high is there, the low is there. So if it hits off the high and it's very far from the high, we call that price rejection. That's bearish. That's a bearish price rejection, right? So essentially we can look over here at this one. This one is very bearish on price rejection. And that combined, that single price action, if we're just looking at one candle, combined with another one of those, so now we have two bearish price rejections. That leads me to believe that price doesn't want to pass that right now. Okay, it looks like right now there's too many sellers. Okay. That would lead me to believe the stock's going to go down. Great. Okay, it's going down, so we're out. And we'd probably want to get out of the stock once we start seeing it go about right here. Okay, if it makes another candle and the candle forms about right here and it starts going back up to this rejection part, it might be starting to be bullish. Great, right? But it doesn't. It rejected and it opened lower than this opened, so it was actually trending down. Great. So now how would you know when the dip is dipped? Now we're starting to look for bullish price rejection. Okay. Or maybe I had that flop. Maybe this is bullish price rejection and this is bearish price rejection. Either way, this is price rejection that's rejecting the bottom. Now we're saying the open is here. As you can see, this candle, the open is here. Okay, the close is here at this line. The high is this one, and the low is this is this price right here. So if you're looking at the chart, remember, we don't want to just take one into consideration. If we're seeing multiple of those, okay? So where does it start? It actually starts here at this candle. Take a look at that. This one, it really, really does it. Okay, that's a hammer. As you can see, it kind of looks like a hammer. It's got a handle here, right? A handle here, and then it's got the hammer head, and then the kind of little price rejection on the top, just a little bit, but it opened and it closed very close to the top of the highest of that candle. That is bullish, especially if you combine that with other candles that are the same way. Okay, so I want to look at one. Oh, that looks like it's rejecting off the bottom there, and it comes back up and it closes. Okay, cool. I'm gonna take that into consideration. We might be getting close to a support line, which is this. And if you don't know support and resistance, crash course. Support basically means is where buyers are coming in and buyers are keeping that price from going down. It's like having an army, right? You have an army and there's support. There's more soldiers coming in than the enemy is able to fight. So there's a lot more soldiers, and there's this one wall of just infantry, right? So we can see that happening here. Price really could not break this number, which was 165 right here. 165, it could not break that. And then there was just so much buying pressure, it sent it higher. It sent it higher again. And we were still looking at hammers here. And now you can see price starts to reject about here. And that's fine because it makes candles that are still hammering after. Okay, like this one here, which is great. Then we start to get to, once again, bearish price rejection, which are these. As you can see, they're making topping tails. They still opened and closed higher, which is why they're green, but they're still making topping tails. Topping tails are like an inverse hammer. It opened and closed lower. Actually, it opened and closed closer to the lowest part of that candle. So let's just zoom out and see what the stock actually does. You can see it has rejection here and it rejects hard, and then it just bounces really nice. Great. And then when the stock really goes crazy is when it breaks this level here. When it breaks this level here, this rejection of price, the stock just boom. Because as you can see, we've got a couple rejections right here. We got this rejection, we got this rejection, we've got this rejection off the top. And then all of these candles are rejections here. Once it breaks that, and then it breaks this one, this line, the stock's gone. So essentially that's what we're looking for when we're buying dips. And for you to maximize on the profit, you would have had to reach this one here, okay? So that's essentially what we're looking for when we're sniping, okay? We want to look for these parts here, okay? And emotions might say, oh, it dips about this far, it's time to buy. Maybe it was, but in this case it wasn't, right? So and look at that price rejection right there. That is just insane price rejection. That is so high that you can almost guarantee that it's going to be rejected off 255 for a while, because of how big of a price rejection that was, how big of a candle that was, and then how low it closed in comparison to the low of the candle. So things to consider when you're looking for snipes, when you're looking for the dips. We're dip snipers. We are bullish by nature, and some people are bearish by nature. They naturally want to look at sniping highs. They want to look at the highs and they want to take advantage of that, which is what goes on here. They want to look at this, right? So essentially what we are looking for okay, you see the candles? We're looking for accelerated moves down to support. That is a snipe. We're looking for accelerated, fast moves down to support. That shows there's an overreaction in the market. That shows that we are now in territory where the market's looking to correct. Okay, the market is looking to bounce back. Just like a spring, you compress the spring, you compress the spring, and then boom, you let it go, it bounces back. That's exactly what we're looking at right here. So that's why this was a very bullish moment here, okay? Quick crash course on candlesticks. Quick crash course on support and resistance. And resistance is just the opposite of support. Resistance is support on the other side of your argument, right? So if you're going short means that you're hoping that the stock goes down. You're betting that the stock goes down. You sell the stock high and you buy it back low. You're basically taking a loan, right? A more sophisticated way to trade. Resistance would be when there's buyers starting to come in, okay? So it's the opposite side of your argument. So quick crash course. I cannot talk. Quick crash course on reading candlesticks, on support and resistance, and how to be a dip sniper. Thanks for watching, guys. If you got any value out of this video, consider subscribing. Please like, please comment if you have anything that anybody else could learn from. If you have any tips, lay it down there in the comments. Okay, lay it down there, bleep bloop it all, and let's find some good dips. Okay, we're gonna be snipers, and that's something that we really want to emphasize is snipers. The stats for a sniper is 1 out of 1.3 shots are critical hits in the battlefield. A sniper. So what does that mean? That means they very rarely shoot. And when they shoot, they do not take the first shot offered. They wait for the absolute best circumstances. And many criteria must be met. So that's what we're looking for when we are being a dip sniper. These are all targets that we are looking for. Whether or not emotions get in the way and deter us from that, that's a different story, because it always will. Just how good are you at catching it when it does, and how fast you are at getting out of that is going to keep you in the game. Okay? Thanks for watching, Dip Snipers. We're going to try and find some stuff tomorrow, and we're going to try and get our episode 1 of $100 to $1,000 going. And once we hit $1,000, we're going to do 1,000 to 10,000, okay? So we'll see you guys on episode 1. If you enjoyed this, once again, smash all that stuff. Like, subscribe, hit notifications. We'll see you next time.